Welcome back. You're with Money, 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 and we're discussing mutual funds and answering a lot of your questions that we've been getting over the last few weeks. Well, Shubham Kumar is now joining in from Uttarakhand. I think he's a BCom student. Let's find out more details. Hi, Shubham. Welcome to Money, Money, Money. It's good to know that you're thinking of investments even as you're studying. So tell us, how can we help you?
मैं बीकॉम परस्यू कर रहा हूँ लेकिन साथ साथ में एक पार्ट टाइम जॉब कर रहा हूँ.
Okay.
तो पार्ट टाइम जॉब से मैं 12,000 रुपए तक अर्न कर रहा हूँ अभी फिलहाल.
Okay.
इसमें से मैंने 500 रुपए पर मंथ की SIP शुरू करी है. फ्रैंकलिन हाई ग्रोथ कंपनीज फंड में 500 रुपए पर मंथ की मैंने SIP भी शुरू करी है 30 साल के लिए.
Okay.
तो मैं आपसे जानना चाहता कि 30 साल में कितना मेरे को रिटर्न करेगा और इन फ्यूचर के लिए मुझे किन किन चीजों में इन्वेस्ट करना चाहिए.
मैं अपने एक्सपर्ट से पूछती हूँ. श्रीकांत, what would you advise him? He's new to the world of mutual fund investing.
Absolutely. I mean, somebody who is 22 years old and starting to invest. I was going to say that 500 rupees is not much and all that stuff, but he's 22 years old and he's a student. The fact that he's doing an SIP itself, hats off to him. So I'm very happy about what he's doing. See, he's investing 500 rupees in Franklin India High Growth Companies Fund. Okay, it's not a bad fund at all. It's a good fund and it's a good mid-cap fund. It's an aggressive fund. Okay. And for somebody who is starting off, as long as he does not get discouraged when there is a spell of bear market and the money tanks a little bit, he'll be fine with investing in this fund.
All right, Shubham, so keep at it. Keep with your investments. You've started early and that's always a great way to be. Let's welcome the next caller on the show, Puneet Agarwal, who's joining in from Mumbai. I think he's a software professional. Let's find out more. Hi, Puneet. How can we help you?
I have recently started SIPs. For SBI, I am putting more money in SBI Blue Chip Direct Growth Fund.
Okay.
And for HDFC, I am putting money in HDFC Balanced Fund Growth Direct.
Okay.
For ICICI, I am putting money in ICICI Prudential Services and other Export and Other Services Fund. And one more fund of ICICI is ICICI Value Discovery Fund.
Okay.
So in total, I'm investing 15,000 per month. So my investment horizon is approximately for 15 to 20 years.
Okay.
So
you want to evaluate your portfolio and see if these are the right funds that he has. So I mean, he's in three different asset management companies.
He's got a good portfolio. I'll just give one caveat to that good portfolio comment. But he's got a blue chip fund, he's got a balanced fund, and he's got a mid cap fund, and he's got a thematic fund.
Export and other services.
Export and other services. The fund has been doing really well recently, so I'm not surprised with the pick. But it's a scheme. It's a class of scheme that you have to watch a little bit. Okay, you cannot. It's not a fire and forget fund. I mean, if you say ICICI Value Discovery Fund, fill it, shut it, forget it kind of a fund. But with thematic funds, with a sector-oriented fund, you have to watch it a bit and then, do a little bit of timing and see, whether you want to stay invested at a particular time or not.
Okay.
So he will need guidance in that regard. A better option would be to move out of that fund and go to a fund like ICICI Pro Dynamic Fund, which is more of a diversified fund.
Okay, our final caller on the show today is S. Roopchand. Again, he's from Mumbai, so let's find out what his question is. Hi, Mr. Roopchand. What's your query?
I just want to ask you whether if you can please advise me on 5-6 debt mutual funds. I think growth option should be best. I'm not decided on that also. Where we can safely invest retirement savings for few years, and which list to AAA companies or very safe companies, where our money will be safe. And also, please advise on the short-term and long-term capital gains on mutual fund debt funds, and which option should select: dividend, monthly dividend, yearly dividend, or weekly dividend, or growth option. And my second question is on tax-free bonds. I wanted to buy from the secondary market from the previous year's issues, which are available at good prices and which have good liquidity.
Okay.
If possible, you can please advise me on this.
Okay, all right, sir. Lots of questions. But you know what? You're not alone, because we've been getting a lot of queries. We're in a declining interest rate environment. And, you know, Shrikant, this is something that a lot of viewers have written in, saying that obviously my bank FD is not doing much for me now. Is there a smarter way of investing in debt via debt mutual funds?
Definitely.
Having said that, the caveats that come in, the sort of underlying paper, I mean, how safe are some of the corporate, FD funds or the corporate security funds? So what would you advise our viewer here?
First, let me take the tax rebond question, get that out of the way, and then we can go to the mutual fund part. Right? Yes, there are tax rebonds available that were issued last year, the previous year, and they are available in the secondary market. But one thing that one has to be careful about is that the liquidity is not much. There are 2 or 3 good tax rebonds that are available in the secondary market. HUDCO bonds are available, the highways bond are available, and the railway bonds that were issued last year. They're all available, and around a YTM, yield to maturity of about 7%, 6.5 to 7% after tax. This is no tax basically, right? So that's not a bad place to be in. Coming to debt funds, right? The investor, Mr. Rupchand, he's in a high tax bracket, and tax efficiency, especially post-retirement, is an important consideration, right? And Mr. Rupchand had a question about whether to invest in dividend option or growth option. When it comes to the perspective of tax, it's definitely good to go with the growth option, because when you go with the dividend option, DDT comes into play.
So your dividend will get taxed, and you won't enjoy the indexation benefit, etc. on that, I'm guessing.
Nothing, exactly. The dividend the dividend issued will get taxed before the money comes to you. So, and it will get taxed at close to 30%, which is your marginal tax bracket anyways, right? So, it doesn't make sense for the person to be investing in a dividend option in a debt fund. So, they should invest in a growth option.
Okay.
And hold for at least 3 years to get the long-term capital gains benefit and the indexation benefits that come along with holding it for long-term. And when it comes to the category of funds to invest in, this is where things get interesting, right? There are so many categories, and we thought equity funds had so many categories, but you know,
debt is far more confusing. Equity, at least it's simple, you know, large cap, mid cap, small cap, it's still easy to understand. Debt is another game or another level altogether.
Different kettle of fish altogether. Absolutely. So you go all the way from your liquid funds to, you know, in terms of risk, to all the way to the gilt funds, which have one variety of risks, and then you have your credit opportunities fund, which have another variety of risks, and in between, you know, as the Bart says, you know, therein lies the tail, you know, between the two extremes, right? So you have your short-term bond funds, and you have your dynamic bond funds, and then you have some hybrid, medium-term funds and all that stuff. It depends, you know, as advisors always say, it depends on what you want to do with your money, when you need your money back, and how much risk you're willing to take.
So, you know, I'm going to simplify this and just take the example of someone who has a very medium risk profile. The reason you're investing in debt is that you want an element of protection in your portfolio. Otherwise, you might as well put 100% in equity.
Absolutely.
So let's talk about selecting a debt fund for someone with a medium-term risk profile, and also the ease of liquidity should be there, because that's something else that's associated with debt, the nature of, you know, that asset class. Now, given these two things, with these two requirements, then what sort of a debt fund should you choose?
The one phrase that you used in the middle of your question, that to say that, you know, I'm investing in debt funds to mitigate the risk of my overall portfolio. That's a very important phrase, because that tells me that you are taking an asset allocation approach, right? That you are dispersing your investments across different asset classes to manage your risk, right? In that situation, you have to take a moderated approach to your debt investment, and you have to pick a good fund and trust the fund manager. The right class of funds that let you do that are the income funds or the dynamic bond funds, right? The dynamic bond fund category lets the fund manager choose the appropriate risk profile, be it credit risk or duration risk, appropriately given the scenario out there in the interest rate scenario as well as the debt market scenario, right? Based on these, they take the call. The fund manager takes the call as to what amount of what variety of risk should be taken in the portfolio. Okay. In that situation, when you take an asset allocation call, when you want to put money in a debt fund and not worry about that money and say that, this is going to give me some risk protection in my portfolio, that is the best class of fund to be in, wherein you trust the fund manager and say, please take these calls for me.
So dynamic bond funds. So coming back to Mr. Roopchand's question, he's a retired individual and he started off by saying 5 to 6 debt funds. I don't know if you need that many or not.
I don't think.
What would you advise him?
A few good dynamic bond funds, right? Birla Sun Life Dynamic Bond Fund, UTI Dynamic Bond Fund, HDFC Medium Term Opportunities Fund. 3 funds should be plenty for a debt fund diversification in terms of fund management and in terms of fund houses. I think that should be sufficient.
Well, Srikanth, it's been absolutely enlightening talking to you. Thank you so much for coming in, taking out the time and taking us through the world of mutual funds and answering so many questions and queries.
Absolutely. My pleasure. Thank you.
All right, that's it on this week's edition of Money, Money, Money. Thanks for being with us. And in case you have any questions on your portfolio or anything else that's relating with personal finance, don't forget to reach out to us. Our email ID is on the screen. Until next week.